At a 2 p.m. decision, the Fed staying put on rates. A lot of color commentary to break down here from Jay Powell. Of course, let's take a look at the market. So not too much of a reaction, although a little bit of a pop here. We are up just about 0.3% across the board. We're also seeing activity in the bond market, the 10-year yield dropping to 2.022. That is the lowest in 2.5 years. Joining me now to discuss, I've got co-host Myles, Udland, Yahoo Finance editor-in-chief Andy Serwer, editor-at-large, and co-host of The First Trade, Brian Sozzi. And I'm not done yet. We've got George Rusnak. He is the co-head of Global Fixed Income Strategy at the Wells Fargo Investment Institute. And, you know, look, people said he had to walk a tightrope. He had to thread a needle. He had to make a lot of people happy.
Yeah.
And so far, it seems like that's kind of what happened today.
Yes, yesterday was the move, I guess, right? Yesterday, the market was up 350 points, so you're only up 70 now, and the Fed pretty much comes in line with expectations. I think we're starting to learn, obviously we're starting to learn. Jay Powell's now been the Fed chair, I think this is his 10th meeting since taking over, but we're learning a lot more about the words that he leans on. Cross currents came up a number of times today, and thinking about what is going to impact the Fed, talking about, you know, the global economy is certainly a risk factor there. But George, I'm just curious, when you look at what the Fed said today, what stands out to you? Is it the set of projections? Is it the dot plot? Is there something in the way that Powell is communicating now that makes more clear or less clear, perhaps, where you think this Fed is headed?
It's more clear, I think. And if you look at it, you know, he couldn't lower rates per se, but he had three forms of communication. You had the statement come out, you had forecasts, and you had the communication, the press conference. All three of those were very benign, very dovish, and actually allowed the markets to go up both on the equity market and the bond market, which continued the same theme.
Now, we know that Powell, again today, trying to de-emphasize the dot plot, and I think a lot of people would like to see the Fed perhaps get rid of the dot plot, right? Because it does lock them in a little bit. But I'm just wondering what you made of what that dot plot said, which is pretty much half the FOMC thinks that we're going to see a rate cut this year, but only one. The other half thinks that nothing is going to happen. Yeah,
no, I think you're right. It's funny because they put it out there, but they say, don't worry about that, right? It's done actually pre, not post, right? And so the idea of, you know, is it really directionally where they're thinking about rates? Well, maybe, but maybe not. From our perspective, it is pretty meaningful to see 8 people actually thinking that the Fed is going to be cutting rates sometime this year, and potentially even 2 rate cuts over the course of this year and next year.
Yeah, I should clarify that median projection calls for 2 cuts from 7 members, 1 cut from 1 member, 8 members, no cuts, and 1 person thinks we're going to raise rates.
I want to know on the hike.
I don't know where they're at, but, you know.
We also got a first dissent under Powell. That's you know, it's Bullard coming out with that. I mean, I look at the dot plot, and when you see this 8 and 8, you think, wow, they really are not all on the same page here. And Powell himself said that, you know, there was not that much support, frankly, for cutting rates at this meeting.
Yeah, but I think net, what you had was a consensus essentially, therefore, because it balanced itself out. And, you know, I think he did thread the needle. And this is a Fed chairman's dream, which is the reaction, which is to say, not a reaction. I mean, that's what you really want here, which
he
is
finally got it.
Yeah, you want, exactly. It took him a while, but he wanted this quiescent reaction. I think it was interesting also to hear his thinking a little bit on the global economy when he talked about the risks and the slowdown in manufacturing decoupled from the global trade risks. He said that was a separate thing, which had to do with what was going on in China in terms of the way the economy is structured and handled there, and maybe Boeing planes and things like that. And then he said the global trade, and then he talked about services doing well. And that was sort of a balancing act that they were studying that had risk, but they were looking at. And then I thought it was interesting, too, when he talked about this several times, underserved communities, underperforming communities, I should say, that have been bolstered by this extended rally and extended economy doing well, and that was a real focus to kind of continue and make sure that they're feeling the benefits of the economy continuing to perform.
Yeah, I think he also sent some succinct messages to President Trump. One, a lot of discussion about trade and the impact the trade outlook is having on the Fed's thinking. And also, he said he's not going anywhere. Due to the law, he's going to serve his full 4 term. I think 2 powerful message. But the most important one, I think, is on trade. To the administration, you have to get something done, and you have to do it very quickly.
That was the shortest answer, I think, that he gave to all the questions was, what would you do if the president tweets that he would like to demote you? And Chair Powell saying that I think the law is clear, and I have 4 years, and I fully intend to serve it. He didn't bite really on any of the other political attempts. He said, I don't comment about elected officials.
Publicly or privately.
Yeah, or privately.
So really trying to
Zip.
Yeah,
Right.
trying to stay away from that there. Now, George, just thinking about what your guys' forecast is for the rest of this year. I don't know if today changes that for you, but what do you think is coming from the Fed by the end of this year? 1 cut, 2 cuts, more?
So from a forecast perspective, we're looking at 1 cut by year end. It depends upon timing. Right now, it's looking sure like it's going to potentially be the next time they meet. Our base case was that it might be until September. A lot of the data has definitely slowed, and we've kind of built that into our forecast. Our GDP has kind of come down to roughly 2%.
Yeah.
I think the big mover today, though, was the inflation number, right? The idea of they moved inflation down in March by a couple ticks, and they moved it down again by 3 ticks going forward. And I think that's a big challenge. Not only that, but you have to go out to 2020 and 21 before they break through 2% from an inflation perspective. So from our perspective, that's a bit disturbing and challenging for them to balance.
Yeah, and what I think is interesting here, a line that everyone really caught on to was Powell talking about an ounce of prevention is worth a pound of cure. So really this notion now that it's a risk management scenario for the Fed. I mean, Andy, this is certainly different than the Yellen Fed, where there was clearly an effort to try to get rates back towards something like normal. Right now, it seems Powell's focus has shifted to sustaining the expansion, and that he thinks, at least to me, it seems like he can be a little more creative.
Maybe he's starting to get on my bandwagon. Like, you can forget all about inflation. I'm not going to talk about that today. It's going to be the first show.
I want him to get on your
that I'm not going to
bandwagon.
talk about how there's no inflation because of technology and productivity gains made by technology, and no inflation because of that. I thought it's kind of interesting that we just are all accepting, the economy's weak, and therefore we need cuts, maybe this year, but certainly next year. And I just, from the mouth of emailers to us and our viewers, longest bull market in history, lowest unemployment in 50 years, inflation and deflation non-existent, record profits and cash scores corporate America. And this is a problem that needs a stimulus. I mean, you can see that perspective. And I want to just throw something out there. By talking about this need for a stimulus, isn't the Fed chair enabling Donald Trump to have a trade war? I'm just putting that out there, right? I mean, you can go ahead and have a trade war because I got your back with a rate cut.
Well, I think we might see it that way, but certainly Powell trying to make clear that he does not see it that way. Take that for what you will.